Good morning. Welcome to IG's early morning call. It's Friday, 9th of June. Let's take a look at the headlines as we wait to what looks like possibly a little bit of a stronger start at the beginning of today's trade across the European markets. This follows the S&P 500 entering a bull market as at the cash close yesterday. It has been bull in terms of intraday over the last few days, but this is the closing bull market. Central banks, meanwhile, take centre stage next week. We'll take a look ahead to see just what the Fed and the ECB could do in terms of rates. And General Motors has adopted Tesla's standard for charging electric vehicles. Is this a major victory for Elon Musk? Well, let's take a look first of all at volatility, and I think this just goes some way to explain what's going on. I was talking about this yesterday in the early morning call. And we're now there down at levels not seen since the 20th of February. This is not good news for us traders because traders like to see something over 20 at least and something higher than that as well to give the sort of disturbance to the markets that we need in order to make sure that we can make trades work with some degree of profitability. There are movements, as we'll see in the next 15 minutes, and indeed there are some interesting stocks to watch, as well as some of the interesting moves on the foreign exchange markets around the central bank decisions. We've been talking this week as well in the early morning call about how we've now got this hawkish tinge to what's going on in terms of interest rates. And this is giving us a nice little bite on what's happening with the euro, with sterling, and other currencies around that US dollar. We'll take a look at that in just a few moments' time as well. And then let's take a look at what's happening with risk assets, because as we see these markets pull back in terms of volatility, we are seeing some pockets of interest, but not here in London. London markets have been affected by money coming out of oil stocks and mineral companies. And as we'll see over the next couple of charts or so, London has been very much the underperformer. That being said, the MACD continues to point up, indicating for me that momentum is beginning, or not necessarily beginning, but certainly trying to tend on the upside, despite the fact we've got the third day in a row of losses for the 24-hour markets here in London. But it's a very different picture across the European markets, where you can see here Germany. We saw gains yesterday, and indeed gains in France as well. And we're holding on to those gains at the moment at 15,999. Some areas of interest in the French markets we've got here, as you can see, holding at yesterday's highs. I want to talk about a couple of companies of interest. I want to bring up a chart, first of all, of Edenred. Now, this is a company which has now entered the CAC 40. The French media conglomerate Vivendi's lost its coveted spot on the French benchmark CAC 40 stocks index. It will be replaced by this business, which is a payments specialist. That'll all happen on the 19th of June. Edenred was formerly Accor Group. It follows the drop in Vivendi shares recently. Let's take a look at what's happening with the media company. Down at 8.33. Vivendi shares fell in May when the Bolloré Group, a major shareholder in Vivendi, sold stock in the business, telling the market that a takeover of Vivendi was now not on the cards. And as a result of that, we've seen Vivendi pull back to recent lows. You can see some of the declines that we've seen in Vivendi stock. That will open at 8.33 this morning. We heard about this news overnight, but it was well headlined in the markets over the last few weeks or so. Overnight in Asia, let's take a look at what's been happening there, with gains across the board ending out the week in positive form. The Nikkei 225 stealing the news or stealing the headlines with a rise of 1.95%. Gains as well in Hong Kong and the Hang Seng. Wall Street closed yesterday, as I said, S&P 500 entering a bull market on the closing numbers. Gains across the board, S&P 500 up 0.2%. As you can see, it was the Nasdaq that stole the thunder yesterday. But I want to start off on the S&P 500 in terms of charts. Now you can see here that this blue box represents the move that we had since the 13th of October last year. And we scored a 23.17% rise intraday, which is the highest we've seen over the last week or so, back on Monday this week. But yesterday was the first cash close where we've seen this market rise to a bull close on the cash session. But this market is continuing to trend on the upside. Insofar as where we are from the beginning of the year, just want to show you what's been happening in terms of the move that we've seen in the market. That is where let me just move that up to get a better idea as to where we were at the beginning of the year. Sorry, doing this on the fly. Let me tell you there. That's it. That's the beginning of trade there. Since the beginning of the year, we're up 11.15%. Now, let me show you, with that 11.15% in mind, let me show you just how much market move the techs have had this year. This is the Nasdaq since the beginning of the year, up a whopping 37.44%. So the amount of time, three times the amount of space that's been made up on the upside for these tech stocks. It's tech stocks that's really been pushing the S&P higher, 37.44%. We're off the highs from the point we were at the beginning of the week. So technically speaking, we are still on a down week for the Nasdaq, but it's looking as though we could well see these markets hold on to the gains that we saw yesterday, as at the close on the cash session, or the 24-hour markets yesterday. So the cash session looking higher when the Nasdaq gets underway a little bit later on. Now, meanwhile, it's becoming more and more obvious that the Chinese economy will make its government target average consumer prices about 3% in 2023. On the contrary, the risk of deflation, though, is a growing concern within the country as the CPI tumbles. Chinese consumer prices rising, pardon me, just 2.2% year on year, accelerating from a 1.1% rise in April, but it missed the estimate of 0.3% increase. Now, food price inflation, a key driver of CPI, slowed to 1% year on year from 2.4% in the previous month. I think this big drawdown that we've seen in inflation concerns many economists, suggesting that we could well actually end up seeing deflation in the Chinese economy. Chinese factory gate prices fell at the fastest pace in 7 years. May PPI fell for an 8th consecutive month, down 4.6%. And there really is a hint in amongst these figures that if we see a continuation of the direction of travel, we could well end up seeing the move down in inflation down to deflation. And that will be a real problem for the Chinese economy. You can see here in today's session, US dollar is up against the Chinese yuan at 71.304. Yesterday we saw a down day for the dollar, which I think is why the dollar fell. You'll see this in a number of currency crosses, but we have seen an upside tick to the dollar in today's session as a result of this data coming out in the Chinese economy, suggesting that in the next few months there is a danger that we could well see some deflation coming through. Now, at 1:30 p.m. today, we get the unemployment numbers in Canada, expected to rise to 5.1% in May from 5% in the month of April. The US dollar CAD is an interesting chart to follow. We talked about this yesterday. We've got a drawdown today, and indeed the fourth day in a row for the dollar against that stronger Canadian. And indeed, if we close at these levels, it will be the lowest close that we've seen since the 14th of April. But we're very close to going down to levels not seen since the 14th of Feb. If we see much more upside for the Canadian dollar, that is downside for the dollar on this chart. Now, it's a big week next week for interest rates, with two big decisions to come. The US Federal Reserve decides on interest rates on Wednesday at 7 p.m. UK time. Markets are pricing in a pause from the Federal Reserve after 10 straight meetings in which it jacked up its key rate by a full 5 percentage points in 14 months, the fastest rate of increases in 40 years. Now, this has taken rates from flat to a 16-year high. The purpose? To fight inflation. Economists do see this coming meeting as an opportunity to pause to see what degree of a slowdown it's managed with its actions so far. Markets are beginning to price in a further possible 25 basis point rise as at the end of the July meeting. Ahead of the Fed decision, though, next week, markets will get an update on US inflation. The consumer price index due on Tuesday is expected to fall to 4.7% year on year, following a 4.9% rise in the previous month. The focus will be on core CPI, forecast to fall to 5.4% year on year from 5.5% in April. Now, since the March headline CPI figure is below the core CPI, the market fears the spread between the two indicators could be widening. In other words, energy prices might go down, but broad-based inflation could be stickier than thought, from 0.4 percentage points in March to 0.6 percentage points in April. If Tuesday's reading matches the forecast, that will appear to be a 0.7 percentage point spread. Now, one of the ways we can measure what's going on is taking a look at what's been happening with the dollar. And the dollar is down this week overall. Yesterday, big declines in the US dollar, 102.98. Now, if the Fed does pause, this might give further food for these equity markets, where we've seen an 11.15% rise so far this year for the S&P 500, and we could see further upside if we do get the Fed pausing and giving us some sort of an indication that the Federal Reserve is now becoming more dovish. Now, after the Fed decision on Wednesday, we get the European Central Bank on its decision at around lunchtime on Thursday. The European Central Bank is widely expected to raise the key interest rates by 25 basis points at this meeting and again in July before pausing for the rest of the year. This is according to a poll conducted by Reuters, which indicated that economists believe inflation across the single currency economies remains sticky. After 375 basis points of rate hikes over the past year, economic activity across the region has slowed, with Europe's biggest economy, Germany, and the Eurozone as a whole sliding into that winter recession that we've been recording. That same poll also said both Germany and the Eurozone are expected to rebound this quarter, with Eurozone growth of 0.2% in each quarter for the remainder of the year. One of the big trades out of this will be what's happening with the euro-dollar trade. We can have a look at this now to take a look at what's going on. But when looking at this, you must bear in mind that this ECB decision comes after the Federal Reserve decision on Wednesday, the previous evening. Now, we've seen a big rise for the euro this week, and in fact, it looks like we could well end up with gains overall in the week. Euro is up against the US dollar and up against other currencies as well, currently trading at 107.80. Now, if there is any hint that we do get a continuation of the hawkish stance from the euro area, the ECB, there is the potential for further upside to go for that euro-dollar trade. General Motors has announced it will adopt Tesla's North American charging point plug standard for its electric vehicles. The GM electric vehicle buyers are now able to use the Tesla supercharger network. It means this similar agreement had only been made with Ford, which now means that 3 of the top EV sellers in the North American market have now agreed a standard for charging the hardware. Now, we've got gains in extended trade for both General Motors and also Tesla as of the close on Thursday evening. Let's take a look at the General Motors chart just to show us what's been going on there. Investors applauding the decision. GM shares up in extended trade by a margin of 2.89% when things ended out yesterday's session. But it was a good day for Tesla when all was said and done. After the close yesterday, saw this big rise in Tesla stock. It could turn out to be a major win for Elon Musk, which he's invested heavily to deploy the Tesla fast charging stations across North America and indeed across Europe. Tesla superchargers account for about 60% of the total fast chargers in the United States and Canada. Now, this agreement will have a significant commercial and public policy implication. The Biden administration wants to impose a rival combined charging system. Now the alliance between Tesla, Ford and GM seriously challenges the White House's plans, as Tesla, GM and Ford together account for about 70% of the total EV charging network across the US. And indeed, for those that are old enough, will remember the big fight between VHS and Betamax for the standard in video recording. VHS ending with a win, but many saying that Betamax was actually the better system to use. But in fact, we all ended up using VHS recorders because it became standard. Let's move on and take a look at some other areas of the market, of which I think could well be of interest this morning. There's nothing else in terms of corporate news, but I want to take a look, first of all, at what's going on with the oil markets. It's been an interesting week for oil. And indeed, today we've got this oil market now showing us at the bottom of yesterday's full candle body. If we look at what's going on this chart here for Brent, yesterday was another down day. I think if you look at the long-term trend, would seem to be down. And I would, if I was on short on this, I don't have a position, but if I were on a short on this, my price target would be the $70.10 down here. Currently trading at 75.53 on Brent. My stock would go above this area up here at around about the $78 level. 75.54 is where we are. 70.10 is the move down to the price target I would have for Brent. Last Friday, Baker Hughes' total rig count fell by 15 to 696 last week. The number of oil rigs in operation fell to 555 from 570. And there is this drawdown in the rigs in the US. I think there's a temptation, I think, for some of the oil, which tends to be the heavier end on the Permian Basin, which is where these rigs mostly are, I think in favor of buying in oil from other areas of the world, such as Venezuela, relatively close in terms of geography, or at least it's in the Americas, to prefer that at these low prices rather than continue to turn on these rigs that are available in the US. Let's go on to take a look at one other chart, or a couple of other charts actually. That big drop we saw in the price of the dollar yesterday sent up the price of gold. And indeed, the gold price yesterday ended the highest we've seen since Friday last week, and we're holding on to that level at 1965 at the moment. One other chart was one we covered yesterday, Robusta coffee, trading up in the London markets yesterday at 27.33. That is a new 15-year high for the price of Robusta coffee. As we were saying yesterday, London Robusta is still rallying after its 15-year high on expectations of tight supplies from Brazil. Earlier this week, the US Department of Agriculture forecast a 5% drop in Robusta bean production in the 2023-2024 season. That's it. About 15 minutes to go before the start of today's European market. Still looking for gains on the German and French markets, certainly. London markets not looking quite so good for a second day in a row. Certainly seems like London could well be an underperformer at the start. But do watch out for those big EV testing numbers that we've seen on from that story, where Tesla seems to have won out, with General Motors, Ford and other manufacturers now beginning to adopt the Tesla strategy. Certainly looking for a positive start for General Motors and Tesla at the beginning of today's cash session in the States.